morning, everyone. My name is Mirza Rachmat, and I am an MBA candidate from IPMI from September 2022. And this is my mind mapping for the corporate finance class in our first semester. And the lecturer was Professor Roy Sembel. And this is the mind mapping. This is the what I want to share is what I learned and what I did in the past 8 weeks, or more than 8 weeks because of the holiday. But this is the 8 weeks that we did this class. So you can see the class overview. There's from week 1 to week 8. This is what we did. So in week 1, we had a syllabus, and also Prof. Roy gave us the assignments that we're gonna have for the final exam, and also in between big projects that we're gonna do. Also, we learn about the financial management and time value of money. So financial management, from the first start, Professor Roy told us that the goal of a company is to be sustainable and also make a profit. So that's the goal of a company. And also there's 8 core of management, which are the capital structure, working capital management, asset structure, revenue management, cost management, cash flow management, growth management, and risk management. That's 8. And also there's we also learned about good corporate governance, which is a good problem solving method for a principal agent problem. So principal agent problem is a problem that mostly shareholders and the management have, because they had a different ideas how they run the company and what they want to do with the company. So there's a principal agent problem, and with that there's a good corporate governance to minimize the problem they're gonna have in the corporate system. And there's the tariff, which is transparency, accountability, responsibility, independency, and fairness. So those are the tariff, and with those, the company can make a good corporate governance system their own. And after that, we also learn about value principle core, which is the principle how we value a company, which is the growth, also the ROIC, which is the return on invested capital, also the cash flow. And after that, we learn about time value of money, which is about we learn about time is also money. Money is time. Time is money. About those things, and then there's a reason. There's opportunity cost, which is if we have $1 today, there's gonna be a different value with the $1 we have in let's say 10 years from now. And also the calculation, the formula for lump sum, and also the rule of 72, which is how we wanna save our money for how many percent of our income to get the goal that we gonna need. There's a 72 rule. Okay. Next, the next week, week 2, we have big materials, capital budgeting, analysis of securities, and portfolio investment. We cover this in week 2 and week 3. So, but for the first we talk about corporate value. What is a corporate value? Is how we get how we value a company, a corporate. There's a six source of corporate value inside the company. Also, there's investment fraud that can happen in investing, and also the environmental, uh, social, and governance of, which is how the people value more if the company is good at environmental, social, and governance. And those are new, not new. It's been a while. How they value a company, and after that we learn about capital budgeting. So how we make the company profitable by the budgeting. There's four ways to budgeting. There's cash flow and net present value, or NPV. There's profitability index, or PI, and there's internal rate of return, or IRR. And after that, we have financial analysis. This is a big one because we learn about how to read a ratio analysis. This is a ratio analysis from the income statement, cash flow, and the balance sheets of a company. From that, we can calculate for the ratio of a company, and if that help us as an investor, or as investment management and manager to invest in a company with a ratio analysis. That's what we learned. So we had a case study, PT XYZ. This is we will learn that as a group, and we use their previous balance sheets, their previous income statement, also previous cash flow, and we determine what is the company, what are the company, and if it's worth investing or not. It was United Tractors, in fact, in the early 2000s. Okay, so week after that is week 4. So in week 4, we learned about portfolio theory and capital structure. So for the portfolio theory, you learn about return, how we can get a return, and what are the risks if we get those return. And then we compare the return versus risk, like if we want to risk it for how many returns. So that's why there's a capital asset pricing model, which is how do we calculate if the company is overvalued or undervalued from the data they give us as a public company. So yeah, those are the capital asset pricing model. We learn about the beta value, also from the linear regression from the data, where we get the capital asset pricing model. After that, we learn about capital structure, which is about the debt a company have, and the value of the company. Like how do we value the company if there's more debt on it, and is it good or not? We had a long debate about it, but in the end, there's a theory made by Modigliani and Miller, which grant them a Nobel Prize because of this, the theory. And after that, we learned about the optimal debt ratio, where there's a certain amount of debt that the company can gain more value or more profit out of them. This is a tax situation. Okay, next. Week 5, we learned about capital restructuring. In this, Prof. Roy gave us his experience in the restructuring about the bankrupt company. So in the beginning, a company, you have to see if there are the turnaround opportunity. If a company is failing, if there's an opportunity to turn around, how we can manage that. And if not, if there's the permanent problem about the company, they can go to file a legal bankrupt or get a private liquidation to help the company, and also a private workout if the company has a turnaround opportunity. And from that, how we value the company to structure, there's a McKinsey matrix implication, which we learn about the value of the company and then the future, like the market value and the future of the company. And there's like the star, which is the highest and the highest, and then the dogs. Nobody wants the dogs. So the lower value and lower lower future. And from that, we had a case study about RGR Nabisco, which is a big case in the US, which was the biggest leverage buyout in the US at that time. And we learned about leverage buyout, and then we had a debate on it too. So next, we had a week 6 was fraud risk management. There's we learn about fraud, like the shenanigans, the 7 shenanigans of fraud. What are those? What are the fraud that can happen in a corporate system? Also, we learn about ethical and unethical act that can happen in the corporate, and we debate about it if it's ethical, unethical, and legal and illegal. We talk about it in the class. Also, there's a fraud triangle, which 3 reasons why people want to do fraud at the beginning. Also, the occupational fraud that's always happen, and there's the data. There was the data that Prof. Roy gave us, and we learned about that too. Like, and then there's management, how we handle those fraud, like whistleblowing mechanism, and etc. So there's a also a dividend policy. In week 6, we learn about dividend, like is it good or is it bad? Like we had a debate if we want a dividend or not, if we're stakeholders. In fact, there's a theory that dividend is good because it reflects the cash flow of the company, that they can still pay the shareholders dividend every quarters. And for the last 2 weeks, we had a movie review presentation from each of the groups. My group had a Wall Street, which about fraud of fraud in the brokerage system. And then week 8, we had a case study, and my group had a BRIS or BSI, the Bank Syariah Indonesia, the Bank Syariah Indonesia merger, and we talk about that. So that's all. Thank you for the time, and hopefully if you're gonna be an MBA, this is an overview of the class. and I learned a lot from this class, how we manage our money, also how we invest our money. That's a personal, and then also for working too, like uh, about the investment of a company, how we see the company as a whole, as a corporate. That's what we learned. So thank you very much, and I'll see you again.